Okay, good morning, folks, and welcome to Stock Charts Today. This is Bob Desmond, and let's begin with a view of the US averages. We have the Dow Jones futures up 132 points. A big rally yesterday, but a single day does not a rally make, so please don't get lured into a false sense of security. While we went out on Friday a bit oversold, you could see here, we were leaning into the third standard deviation Bollinger Band, which I have here in purple. That's over now. We did rally yesterday. We continued the rally overnight. But where we closed out the day yesterday on many of the averages, the IWM, the transports, were all at resistance levels. And this morning, we are bouncing off of the upper band of resistance. So each move higher from this point forward is going to be met with more and more overhead supply. So as we discussed last night on Market Wrap with members, have a strategy. Understand that a lot of technical damage has been done of late in this market, and one day is not going to reverse what caused the markets to sell off to begin with. And that is bond yields rising, which they did yesterday, but the market shrugged it off, and this market is overvalued. Let's get to the S&P 500. Same deal here. We rallied off the lows of Friday. Again, we were leaning into the third standard deviation Bollinger Band. Part of our strategy on the week ahead commentary, which we discussed with members, was that if we were able to get another sell-off on Monday morning, we would buy the market, book profits on our shorts. We did book profits on our shorts yesterday. Obviously, we didn't get out with as much of a profit as we would have on Friday, but a profit nonetheless. And I would have covered those shorts into weakness yesterday morning and then went long the market for a dead cat bounce. And that's exactly what I think we have setting up here. And if they continue to press this market higher, up and into resistance on ever declining up volume, you're going to see me relaunching short positions and leaning into this market to the short side. The NASDAQ, similar price action here, but a bit stronger on the NASDAQ. We did clear resistance. We are on top of it. We did flash a topping tail this last period. These are all 4-hour charts. So watch for a stall here because you're going to have buyers who bought back here, who bought back here. They're going to want to get made whole. They were sent for a scary ride on Thursday and Friday. They want their money back. So watch out for overhead supply. Checking out the US dollar. It was a bit oversold on Monday's close. We consolidated, and last 4-hour period, which just ended, we have a new bar that just opened up, we flashed a bullish key reversal. So that may set the stage for a continuation move higher here for the next day or so. So those looking to buy gold, buy silver, we have a strategy in place, and we will be looking to add as well. Now, the higher level view, the macro view, which we discussed last night, is a significant breakdown on the US dollar. And you can see it here. We closed out yesterday below a critical support level. We have since rallied back, but we're still down below critical support. This is a major league breakdown, folks, but that doesn't mean we can't get brief counter-trend rallies. So those who are looking to buy gold, show some patience. Here is gold. We closed above resistance yesterday. We are now struggling to hold on to that breakout, but we are very, very close to a major, major breakout on the price of gold. The PetroYuan contract, which I mentioned yesterday morning, was launched yesterday. It was launched very successfully. So prior to getting involved with gold, I would wait and see whether or not we close out this period, this 4-hour period, above resistance at let's call it 1356. Oil has pulled back here some. I think we're consolidating. Folks, if we rally up and above 71.05 on crude, that's a pretty significant move higher psychologically, and of course, price-wise. And it's also a sign of inflation. Let's leave off with Bitcoin. All right, so last we spoke about Bitcoin, we were trading within this wedge formation. I warned of a breakdown below this lower band of support. If we got it, we would threaten to take out the lows back here, and we're just shy of it now. We did bounce. Bitcoin at current is like a meat grinder for new longs. It's just chewing them up. Every time we get a rally, new money rotates in, and then the price drops off. I would not go near Bitcoin right now. The path of least resistance is down. When would I entertain getting long of Bitcoin as a speculative long? And again, in big air quotes, speculative long. I would do so on a rally above 82.10. And a retest of the support level would have me adding more. And then a continuation breakout above the prior high would have me adding more to the position. That's how I would play it. But right now, I would not go hoping when you should fear that the price of Bitcoin is going to rally. That's a sucker's bet. Please don't fall into that trap. Okay, folks, now let's segue into members' stock chart requests. This is where I review the symbols that our gold members submit for me to review on video. Let's kick things off with Tesla weekly chart. Now, Tesla, which had broken out here the week of February the 12th, rolled over, breakout point failure, and we have broken down. We bounced on Monday off of critical support. Our low of the day was 291.36. We have our Stokes, which are declining on a weekly basis. RSI down below the 50 or neutral level. Daily chart. All right, so the daily chart is a bit interesting in that we had a reversal day on Monday and we held support. Our MACD histogram is beginning to lose downside momentum. We broke out on Monday on Williamson a jar above a prior high. Volume on Monday was good, above average. Let's drill down here to a 2-hour chart. All right. I think that we're probably, let's update this chart. I think that we're probably going to rally. It appears as though we have broken out on RSI above resistance. We have a higher low on stochastics. Remember, this is a 2-hour chart, very, very volatile. While not a 15-minute type volatility, this chart is still an intraday chart, quite volatile. So take it for what it's worth. The stock is in a downtrend. You have false breakouts all the time on stocks that are in short-term downtrends. Now, it is a bit oversold. Getting back to Stokes, we have a higher low, no breakout yet. In terms of price, if you're going to buy these shares, I would consider a stop if you want to keep it tight, right below support last seen back in February at 294.76. Me personally, if I executed this trade, I would put a stop right down below 291.36. Expect a rally up to this upper band of resistance. If we break out above this upper band of resistance, we could rally all the way up to 321 to 322 before we hit real serious resistance. Just use a stop. I think that we should get a rally in the next day or so. UNH weekly chart. We're in a consolidation on a weekly basis. We have an inside week thus far. No new high, no new low. The week isn't over yet. So we can't read all too much into the weekly chart. Stokes are still declining with lower lows down below the 50 level, so there's no momentum with the exception to the downside. Now, I wouldn't short it, and I wouldn't buy it yet either. Now, in terms of the daily chart, we are in a ever-tightening triangle formation. We can consolidate like this for the next several days. Every time we hit the upper band of resistance here, we pull back. Now, we rallied on Monday, and we negated Friday's bearish reversal day, bearish key reversal. But remember, it left the day trading down below, or into, I should say, the 3 standard deviation Bollinger Band. You had to expect a rally. Is it a dead cat bounce? In all probability, yes. Now, would I buy it? No, I wouldn't. If you do buy it, I would buy it on either a retest of support down here with a stop right below this support level. The loosest I would keep it is on a close below 207.50. Now, if I were to buy it on strength, I would buy it, maybe I would nibble above 222.50 and then add more aggressively on a rally and a close above this upper band of resistance at 227.50, and then add on strength. Rallies up and through 231, 235, 250. I would buy on those breakouts and build my position. Otherwise, right now, all I see here is a stock with downside pressure in a consolidation. Nothing really going on here. DR Horton weekly chart. I have a few home builders to go over here. DHR the first. Now, we rallied off of 41.34. We are leaning into resistance. No breakout yet. I think we're rolling over on Stokes. I think we're going to pull back on DHI, possibly to retest this lower band of support. Just keep in mind, if we roll over on DHI, we may get what we got back here. Now, the last time we had a rollover and a double bottom setup on Stokes was back here, where we took out prior lows on that double bottom setup. So just be forewarned, we may undercut this support level here on this rollover. Now, if we pull back and hold, you could nibble on DHI with a stop right below 41.34 on what would appear to be a weekly closing basis. And I would look to open up or add to my position on a rally and a close above this upper band of resistance. But ideally, you have this double bottom setup, this rollover on Stokes in the rearview mirror, daily chart. Now, on a daily basis, we broke out above not one, but two resistance levels. Here's our secondary downtrend line. We broke out on the 13th. We rallied, we pulled back, we retested successfully. We then broke out above the primary downtrend line on the 21st. We saw resistance, and then we flashed two sequential bearish key reversals. Then on Monday, we rallied. Let's say we closed at resistance. One might argue above resistance. I'd rather play conservative. It appears as though we did manage to close back above the 150-day moving average. We did by about 7 cents. Higher lows getting put in on Stokes. Higher lows on RSI. Did we break out today? Yes, we did. Higher low. So we may get a rally here, but I would warn that the declining 50-period moving average is going to act as a declining ceiling. So I would expect resistance there, possibly a pullback off of it until the 50-day moving average levels out. And then we should be able to overcome it. Volume was a bit light. Higher lows on Ultimate Oscillator. Higher lows on Williams percentage R. If you buy it, I'd use a stop right below Friday's lows and keep that loss small. So there is some bit of optimism on this daily chart, but keep in mind, back to the weekly chart. The weekly chart takes precedence over everything. Unless, of course, I was using the monthly chart. Then it would take precedence over everything. Remember where we're at on a weekly basis. We are right at resistance. All right, so that's going to take precedence over the daily chart. So just be careful if you decide to get long. This is not a short right now, not until we break down below 42.85, and then I would add to our short on a breakdown below 41.34. Pulte, nice consolidation here. You can see that we're forming a double bottom setup, as I just discussed on DHI. No breakout yet. I'd like to buy the stock on a rally and a close above the upper band of resistance. Daily chart. We're in a nice consolidation here. Ever-tightening triangle formation. Same deal here. Ever-tightening triangle formation We may get a rally here soon. Volume was light. Keep in mind also that we had yields that gapped higher on Monday, and that is probably going to act as a weight if that strength continues this week. So keep an eye on yields and watch for a breakout above this upper band of resistance if you decide to get long. And I would keep a stop right below this lower band of support here at, let's call it 2830. Canopy Growth Corp. I don't think that you could buy these shares until we close above 2678 on a weekly basis. Because as it stands right now, we have lower highs that are getting put in. We have the potential here for a double top. And if we break down below 1674, it's all over for this stock for quite some time. Now, the trend is still up, but I would have to say I would buy on strength. Let's see if we can close out the week above 2678. We're just shy of it right now. Daily chart. Yeah, you can see that we're flirting with resistance here. Very tight setup here on Stokes. I'm not going to be the least bit surprised to see a breakout here. But if we break down below 2424, I would get out of the position if you're thinking about getting long. This is not a short right now anyway. Solar Edge Technologies. Now, in a weekly chart, we had a bearish reversal week last week. On Monday, we popped higher, 4.54%. So a nice day. But as it stands right now, we are in a trading range. I would be a buyer of the shares were we to close above 5760. The trend is clearly higher. Volume on Monday was good. But again, it's critical. Please wait for that close above 5760. If you buy it on a rally up and above 5760, I would put a stop right below support so that if we drop back down into this trading range, you just stop out, keep your loss small, and I would only open up a small opening position on this trade. This market is still fragile. We are not out of the woods yet. And that's it for today, folks. Everybody have a profitable trading day. Members, I'll be in the chat room later on today. Everybody be well.